Cypress Development Corp's flagship lithium project is located just east of Albemarle's Silver Peak mine in the heart of Clayton Valley, Nevada. A 12-hole exploration drill program for lithium-enriched claystone on Cypress's 100% controlled properties is now underway. Cypress Development Corp trades on the TSX Venture Exchange, symbol CYP, the Pink CYDVF, and on Frankfurt's C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is home ownership consultant Ross Kay from the wealthyhomeowner.ca. Welcome back to the show, Ross.
Hey, thanks for having me back, Jim.
Last week we talked about Vancouver and Toronto seeing huge drops in sales. And we got a wide range of stories about why and how that's happening, but what's your feeling about what's really happening?
Well, what's really happening probably, Jim, is what we've been talking about on the show here the last couple of years, and often that's how long it takes for numbers to show up. And all of a sudden the excuses and the comments start coming about trying to find an answer. Yeah, it's the consistency in the declines across Canada, except for in Quebec, are really quite amazing for people to be watching happen live, really for the first time in Canadian history, where you've been able to have data at your fingertips and read the comments in the newspapers to the degree that you're able to read them today. You're looking at housing markets in multiple provinces now that have turned negative. All of them have turned negative on the path that they were on. So none of this is different. Quebec still has a while before it needs to slow down. In other words, it still could move forward for a few more months, but we'll know when that market rolls over the same way as we knew the Ontario market and the British Columbia market months or even a year in advance before it rolled over. So the Ontario market, including the Greater Toronto Area, Greater Golden Horseshoe, we told our members way back in 2016, the fall of 2016, that market was already rolling over, and in the spring of 2017, the rollover had been completed. They just had to wait for the housing stats to start showing up. It took a staggering amount of time when you think about it, a full year. So the people that we've been counseling had a year's notice of what was going to take place, and they could sell their property if that's something that they needed to do. Again, they could just delay it right up to the last moment and sell, or they also wouldn't go out and purchase a property that they'd find out a year later they've lost lots of money on. And that's the case. In British Columbia, what we had is a bit of a change because of that $37,000 that was thrown in for first-time buyers. So the market was already rolling forward the way that it was rolling. You could still see that in the single detached homes, where we're looking at about somewhere between 24 and 32% decline, depending on the quality of home that you're buying. Those houses were at a price point beyond where that $37,000 first-time buyer loan was going to impact it. But in the apartment segment and in the condo segment and in the townhouse segment, that $37,000 changed the short-term outlook at the housing market there, and people were caught. They've been caught in the fear of missing out scenario, and they've gone ahead and they've purchased condos and townhomes at these escalating too high prices here the last year and a half because of the a simple $37,000 interest-free loan being given to first-time buyers. What your listeners need to understand is that when a government changes a housing market, there is going to be a consequence. You are never going to see those consequences immediately. The same way that you didn't see first-time buyers leave the market in July. It's just that information has been misreported. The foreign buyers had left the market prior to the tax even being implemented. And data shows that to be true. This first-time buyer advantage of $37,000 of an interest-free loan, that automatically caused first-time buyers to spend more money in Greater Vancouver and in British Columbia, and that in turn got passed on to townhouses on a multiplication factor, because that's how a housing market functions. Your listeners need to understand, you can't get a 20% annual house price gain if you didn't have a 10% gain before and a 5% gain before that. It is impossible. All housing markets function the exact same way. Your housing prices function the exact same way. That's why your housing prices now are going to begin to correct all across the majority of Canada. Quebec is probably going to take a little bit longer, but there are other reasons why Quebec is different than the rest of Canada, but it's going to take a little bit longer, but everywhere else it's going. We're reading things in Calgary about Calgary home prices are stable. They're not falling. Calgary's home prices are not stable. No more than Vancouver single detached haven't dropped 29 or 24 to 32%. You've got to look at peak price. When peak price hit, you were looking at about $1,850,000 in Vancouver, and last month you're looking at about $1,550,000. So there is about a $300,000 drop. But you also have 2 years of real house price inflation. And nobody talks about real house price inflation because they don't know how to calculate it. Well, real house price inflation in Vancouver for single detached homes is about another $140,000. So not only did you lose $350,000, you also lost another $140,000 due to real house price inflation. That's why when you're measuring drops in price, the public never knows this is really what's going on. During the 1990s, when the interior housing market, people were losing 40% of the value of their home. They purchased a home, and when they resold it for 40% less in the GTA. That was real. But if you look at all of the housing data from back then, you'll see that it's basically flatlined. You don't see those declines. That's because selling price is a function of purchase price, buying power, which is what we've told you here on the show for a couple of years. The fact is, prices dropped. Everybody who lives here knows prices dropped up to 40%. Some were more than that. Some were size 60. There were houses in Burlington, my hometown here, that were 60% off what they would have sold for at the peak in the late 1989 and early 1990. And that's what you're seeing happening right now. But once again, your listeners need to understand, organized real estate, the real estate boards, realtors, and the banks, they all want you to go out and buy a house. Because if you don't buy a house, they don't make any money. They are going to manipulate every single piece of data they can manipulate to try to convince you to do that. They're going to use every talking point, every type of advertising possible to get you to do that. I mean, heck, in Ontario here, the Ontario Real Estate Association is now encouraging the government to give first-time buyers a rebate in the land transfer tax. They're wanting more of a rebate than what they already have. They're not saying that if they do that, there will be an automatic increase in average purchase price. It's going to happen. Now, in Ontario, it's a little bit different because the magnitude of a market swing, like it takes so much cash, so much capital, so much mortgage debt to swing the market it's something that can't happen as quickly as it is able to happen in Vancouver. That said, all housing markets follow the same path. What you're reading now, we read a year or 2 years ago. We gave that advice to people a year or 2 years ago. They are now realizing now that our advice is correct. These things do not change. It is not rocket science. It is simple home ownership math.
We'll have more with Ross Kay right after the break.
Glance Technologies owns and operates Glance Pay, a disruptive mobile payment technology now live in 16 cities in Canada and about to launch in the U.S. With revenues up 664% in the last quarter, Glance Technologies has the potential to be a worldwide leader in an industry projected to grow to $1.3 trillion in 3 years. Glance Technologies stock symbols are GLNFF in the U.S. and GET in Canada. Find out more at glancepay.com.
Hi, I'm Douglas Mason, President and CEO of Magnum Gold Corp Inc., MGI on the TSX Venture Exchange. A 2015 drill program on the LH property intersected high-grade gold, including 16.9 meters of 13.58 grams and 11 meters of 20.66 grams per ton gold. A follow-up drill program is planned to further evaluate previously identified subsurface high-grade gold mineralization. Please visit our website at magnumgoldcorp.com.
Welcome back. We're speaking with Ross Kay. Ross, the Globe and Mail had an article about how wealthy Canadians are using low-interest mortgage rates to get even richer, while the Bank of Canada and CMHC have both said regular Canadian homeowners are carrying too much debt. Well, what's the real story here?
Well, what the real story is here is that you are seeing once again how different people view home ownership, how they view wealth creation differently. The Bank of Canada and CMHC's only interest is themselves, their corporation, or the country, for the sake of the Bank of Canada. They have no concern over the net wealth of Canadians, other than, I guess, what they can pay in taxes or how much they can spend to drive GDP. They are not interested in encouraging practices that could build net wealth. While on the flip side, people who are wealthy, they understand the power of low interest rate environments. So the articles that are out there about wealthy Canadians using their mortgages, first of all, a regular Canadian would be foolish to approach it the same way that a wealthy Canadian would. In other words, you would follow the same type of strategy that the wealthy person is doing, except you need to do it in a different way. You need to do it in a different way so that you don't add any risk to your life. A wealthy Canadian will go out and they're going to refinance their property, or they're going to take a HELOC on it, and that money they're going to put into the stock market or whatever else as an investment. Now, for the wealthy person, they have a surplus somewhere in their life, a bank savings, other stocks, investments, that if the stock market drops and their house price drops at the same time, they can weather that decline. The bank is not going to move in on them and squeeze them for money, like we've been watching happening with the banks raising interest rates here, mortgage rates over the last couple of weeks. The wealthy people, they're not concerned about that. But the regular homeowner needs to be concerned about that, because they have other things that they're worried about. They're worried about putting their kids through school. They're worrying about maybe taking a holiday. They're maybe worrying about their health. They're often worrying about just getting their kids in sports, what that's going to cost, because it costs a lot more than people think it does. Those people should be doing the same thing the wealthy Canadians are, but they just need to do it in a different way. They certainly don't need to be going out and borrowing a larger mortgage to do this. What they should be doing is, instead of paying down their mortgage debt, they shouldn't pay down their mortgage debt at all. Gradually over time, instead of paying down their mortgage debt, they invest that money. That way, they're never in a position that even when the housing market is correcting, and which will lead to a stock market correction. So let me be on the record for that. As the housing market is correcting, the stock market will also be correcting in the early months or the first year or whatever. Then the stock market will go back up before the housing market goes back up. This is simply how it works, folks. So you need to eliminate that risk by taking that money that you would have paid down in principal and investing it in the stock market instead. You're doing it slowly. You're watching the difference. You're actually building equity in the stock market at the same time you have been building equity in your house. That allows one investment to offset the other. And I think that's something that all financial advisors say, not putting all your marbles in the same place, or not putting all your eggs in the same basket. That's exactly what I'm talking about here. The difference is, though, you can't do it the same way that you shouldn't do it anyways, Jim, the same way that wealthy Canadians do. You need to do it in a more rational, low-risk, low-stress way. There is no need for any Canadian homeowners, as this correction that we're heading into rolls out, for them to suffer the consequences of anxiety, stress, marriage breakup associated with losing their net wealth in the family home because they've stretched themselves too thin. You're paying down your mortgage debt quickly enough, folks, right now, that if your mortgage is coming up for renewal, you have lots of options available to you that are not going to place you in risk. Don't listen to all this nonsense about debt to GDP, your debt to income ratio, housing prices are 10 times higher than your income, all the nonsense out there that's like that. Because those metrics really don't mean anything to a homeowner. The only thing that matters to a homeowner, Jim, really is their job. Now, if you lose your job and you have not structured your home ownership situation while you were employed to mitigate job loss, then you can be in trouble. And that's really the main reason why the wealthy homeowner was created. It was to reduce or eliminate risk during home ownership. If you structure your home ownership situations correctly, even if you're unemployed for 2 years, you can weather that storm. But you need to take action well in advance of any changes taking place. I think the thing that's unique about how we look at things is because we know what the market is going to do probably at a minimum 6 months out, more commonly at a year out, and we know what's going to happen in terms of house prices. So that leading time for us means that that's how we approach everything. Because there is no need for any Canadian to purchase a house at peak price. There is no need for any Canadian to worry about paying their mortgage during the next 5 to 10 years, as long as you know ahead of time how to protect yourself. And I think that's where the Bank of Canada and the newspapers and CMHC, they're all getting everybody all messed up. They're using fear to drive the change that they want to drive. That fear is what constrains net wealth building for all homeowners, as it has constrained them for decade upon decade upon decade.
We'll have more with Ross Kay right after this.
MGX Minerals is revolutionizing the new energy economy with patented lithium extraction technology, replacing traditional solar evaporation using low-cost, low-energy nanofiltration. The first system of this paradigm shift technology is currently being commissioned. MGX Minerals trades on the CSE, symbol XMG, the OTCQB, symbol MGXMF, and Frankfurt, symbol 1MG. For more information, visit our website, mgxminerals.com.
Don't miss out. Stay informed Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Ross Kay. Ross in Vancouver, those who want to become or hoping one day to become homeowners are often at odds with longtime homeowners, and it's causing a real divide in the city. Should we be putting one generation up against the next, or can they work together?
Yes, they can work together, and no, we should not be doing with what's been going on right now. And we should not be allowing electing incompetent politicians who enact rules and regulations or carry talking points that only divides us, because that's exactly what's happening right now, Jim. Your first-time home buyers, your millennials, for the sake of the argument, those between the ages of 24 and about 34, that's usually when you're entering the housing market for the first time. They have been fed a diet of woe is me and hardship, and they have sought out, they have been provided opportunities to blame other people for the consequence of rising house prices, instead of someone simply telling them, this is how a market evolves, and you are going to get your opportunity to buy in. Your listeners need to understand this. Boomers have owned their homes for a very long period of time. And your listeners will be shocked to know that over the last 6 years in British Columbia, the 25-year rate of return on housing has dropped. It peaked in 2011, Jim. Now, you're not going to see that in any news report. You're not going to hear politicians talking about it. You're not going to see any academics discussing it. But I'm sitting here telling you right now, my data shows me that if I owned a house for 25 years, my very best return on investment ended in 2011. Because in British Columbia, if I had invested my money 25 years before that 2011 deadline, I would have returned almost 8% of my money, compounded every single year for those 25 years. It was phenomenal. It would have been phenomenal. Since that time, from 2011 forward, my annual rate of return, compounded rate of return, from owning during a 25-year window has decreased. It's dropped. Now, if I continued to own from 2011 on, in other words, I purchased a home 25 years prior to 2011, and in 2011 I kept owning for the next 6 years, sure, I would have still continued to have a good rate of return. But if I had purchased my home, say for the sake of the argument, in 2016 was my 25th anniversary of owning the same home, I would not be as far ahead as the person who celebrated their 25th anniversary in 2011. But you didn't hear the politicians in 2011 going around blaming foreign buyers, blaming vacant homes. You didn't hear any of that going on when you had just experienced your greatest 25 years of home ownership in Canadian history. It's years and years removed from those days. Those were the old days now. You are never going to see that return again because it's mathematically impossible. When we talk about home ownership math, when we say it's impossible, what it means is that the income levels of the population cannot increase rapidly enough to allow that existing house price gain to go on, which is why you have a housing bubble and which is why a bubble breaks, because we need a reset, and that reset is now underway. Everybody can say, oh, Ross is wrong. If I did what Ross said, what, blah, 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 blah. Look, folks, everything comes out with time. This real estate math is unavoidable. It is impossible to avoid it. that we are not going to be seeing 10% income gains for every single Canadian for the next 10 years that would support the house price growth. It is not going to happen. And that's why CMHC and all of these housing analysts are always wrong, because they don't know how to measure how housing prices rise. I encourage your listeners, go out and find somewhere else that they tell you the best 25 years of ownership ended in 2011. Find that, folks, because you're not going to find it. I can tell you there is not a province in Canada today where in 2018, if that is your 25th anniversary, you had the best rate of return over those 25 years. Nowhere in Canada.
Ross, going on to another issue here. The Canadian Real Estate Association is claiming the new pot legislation will turn homes into gro-ops and be a danger to not only just the owner of that home, but to the neighborhood. Is that true? And what can be done about it? Now, from what I've seen about the new pot legislation, you're not allowed to have any more than a handful of plants. How does that turn into a, quote, grow-op? And if you can legally buy it down the street in a store, what would be the incentive?
What you're looking at with that, Jim, is the Canadian Real Estate Association moving in to cover up for 15 years of failing to inform the public that realtors don't do their job. The new president of Korea, you just had Andrew Peck from British Columbia leave his one-year term. Now you have Barb Seku or Suko or something like that, who's the new president of Korea from Ontario, a long-time governance person who has no idea how a housing market functions, coming in to cover up for the last 15 years of realtors not checking out to see if pot was grown in a house. The Canadian Real Estate Association, for 15 years, did everything possible so that the realtors didn't have to check out whether or not houses were a grow-op. They did everything possible to avoid any legal liability. And that's exactly what is going on right now. They are now saying, this is real estate speak. This is why we understand what Trump is saying when no one else understands what he's really saying. Because the real estate board is proving it right here, Jim. What they're doing is they're saying, they're going to say, oh, if you grow 4 plants in your house, it's the same as having a whole house turned over into a grow-op. So we could have mold problems. We could have electrical system problems. We could have problems that we don't know about, so we can't be blamed for it. And if you're going to blame anybody, blame the government. Don't blame the realtors. Because the realtors are too incompetent about checking out a house to find out whether or not it was moldy. They're too lazy to knock on the neighbors' doors to find out if there was a problem with someone growing pot in the house that's listed for sale. They're too lazy to go through the police reports or do a simple Google search in their own neighborhood. They're too lazy to keep a record of the houses that they read in the newspaper over the last 10 years where there were suspected grow-ops. They're too lazy to go out and get the training that shows them the key identifiers in a house that has a damage for mold. This is a greater problem, Jim, than simply pot. This is a mold problem. This is really what's underlying it. The single greatest risk to any homeowner is mold. It is the greatest risk because mold can get into a house, and once it's there, you are legally required to disclose it forever. You can, if it's remediated, if you spend tens of thousands or hundreds of thousands of dollars getting a house remediated from mold, you still are legally required to disclose that to the new buyer. And this is where the problem is. The realtors have acted incompetently. They didn't go get the training. They didn't go learn about these things. They didn't keep a record. But you know something, Jim? When you're only selling one house a year, on average, not even averaging 2 houses a year, like 50% of the Canadian Real Estate Association members do, or don't sell, I guess is the way to look at it. That's the level of incompetence you're dealing with. We make sure that those things don't happen, and it's not like it's not even hard to do. We have, you've got that rock star Mike Holmes out there with homes inspections. You can call that guy up, and he'll come and inspect the house, and the realtor's worried, well, I might lose the commission, so I'm going to do everything humanly possible to not have a home inspection done. It's why you should never buy a house from anyone other than an exclusive buyer broker. An exclusive buyer broker never lists properties at their brokerage. They only work with buyers. Those are the people who can protect you against mold, about pot being grown in a house, about problems in the neighborhood. It's not the Canadian Real Estate Association. The Canadian Real Estate Association, just like the Ontario Real Estate Association, wants to boost housing prices so their members can earn more commission and get the housing market busy again by falsely suggesting that the government needs to give a credit to first-time buyers. The Canadian Real Estate Association is falsely claiming that growing four pot plants in your house is going to cause your house to be labeled a grow-op. And they've got credit. They have gotten the press to print this for them. 4 pot plants are going to label your house a grow-op. A grow-op is caused by putting plastic up in the house, lights in the house, grow lights in the house, watering the plants at a certain level in a large quantity, not letting the police know that it's going on in the house. All of those things make up a grow-op, not growing a couple of plants in your house. I mean, Jim, in all honesty, I've sold houses over the years when I was a realtor where I would walk in and it would be an older couple and their entire house was filled with houseplants. Some of them looked ratty and they looked like they were 20 years old. The condensation was so high in those houses that it was on the windows when you would walk in the winter from those plants. Those people would have tons more problems with their house than a family or who have a couple of pot plants that maybe they're growing in the basement. But let's be honest. We know where they're going to grow them, Jim. They're going to grow them outside in the backyard. So where the real problem is the smell. Because the neighbors are going to smell skunks 24/7, 365 days a year. And that's where the truthful discussion of this issue should have been taking place, not looking to use it as a cover-up for decades of incompetence from the members of the Canadian Real Estate Association.
Ross, thank you so much for a very extensive report.
Hey, thanks a lot, Jim.
My guest has been home ownership consultant Ross Kay from thewealthyhomeowner.ca. You're listening to HowStreet.com radio. Find us on Twitter at HowStreet. Our popular YouTube channel is Talk Digital Network. Questions for the show or our guests like Ross can be sent to info@HowStreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.